Something happened in Toronto that nobody saw coming. I'm talking about a shift so sudden, so unexpected, that even the most experienced real estate agents in the city are scratching their heads trying to figure out what went wrong. For years, Toronto's housing market was untouchable. It was the golden child of Canadian real estate, a market where prices only went up, where bidding wars were the norm, and where buying a home felt more like winning the lottery than making a simple purchase. But now, almost overnight, the entire foundation of that market has started to crack. And if you're thinking about buying, selling, or even just renting in Toronto, you need to understand what's happening right now, because it could change everything. Before we dive in, if you find this kind of content valuable, do me a favor and hit that subscribe button. I break down complex real estate and economic stories every single week, making them easy to understand so you can make smarter decisions with your money. Now let's get into what's really going on in Toronto. To understand why this moment is so significant, we need to go back and look at what Toronto's housing market used to be. For the better part of 2 decades, Toronto real estate was essentially a one-way bet. Prices climbed year after year, sometimes by double digits. The average home price in Toronto went from around $300,000 in the early 2000s to over $1 million by 2022. That's more than a 300% increase in just 20 years. People who bought homes in Toronto during that period didn't just build wealth. They became rich simply by owning property. And this created a culture, a belief system really, that Toronto real estate could never fail. It became baked into the psychology of an entire generation. Your parents told you to buy as soon as possible. Financial advisors recommended real estate over stocks. Dinner party conversations revolved around property values and renovation projects. Toronto wasn't just a housing market anymore. It was a religion. But here's the thing about religions. They work until they don't. And right now we're watching the congregation start to question their faith. Let me give you some numbers that should make your jaw drop. In the past 12 months, the number of homes listed for sale in the Greater Toronto Area has exploded. We're talking about inventory levels that we haven't seen in over a decade. At certain points, active listings were up 60 to 70% compared to the same time the previous year. Think about what that means. For every 10 homes that were available last year, there are now 16 or 17 homes competing for buyers. That's not a small shift. That's a fundamental change in the supply and demand equation that has defined this market for years. And here's where it gets really interesting. While listings have been surging, sales have been collapsing. The number of transactions happening each month has fallen dramatically. We've seen months where sales were down 30, 40, even 50% compared to historical averages. So you have this perfect storm forming. More homes hitting the market at the exact same time that fewer buyers are willing or able to purchase them. It doesn't take an economics degree to understand what happens next. Prices start to fall. Now, the official statistics might show modest declines, maybe 5 or 10% from the peak, depending on which metrics you look at. But those numbers don't tell the whole story. If you talk to people actually working in the market, agents who are showing properties every day, mortgage brokers who are running the numbers for clients, you'll hear a different story. They'll tell you about homes sitting on the market for months without a single offer. They'll tell you about sellers dropping their prices by $50,000, $100,000, sometimes $200,000, and still not finding buyers. They'll tell you about open houses that used to have 30 people lined up outside, now having 3 people walk through, and 2 of them are just neighbors being nosy. Something broke. And it didn't break slowly over time. It broke fast. So what caused this? How did a market that seemed invincible suddenly become so vulnerable? The answer isn't simple because there isn't just one cause. It's a combination of factors that all converged at the same moment, creating the perfect conditions for a market correction. Let's start with interest rates. This is the most obvious culprit, and for good reason. When the Bank of Canada started raising interest rates to combat inflation, it fundamentally changed the math of home ownership. A mortgage that cost you $3,000 a month at 2% interest suddenly costs you $4,500 a month at 5% interest. That's an extra $18,000 a year just to carry the same home. For many buyers, that extra cost pushed home ownership completely out of reach. But what's really causing panic right now isn't just the high rates themselves. It's the mortgage renewals. You see, millions of Canadian homeowners took out mortgages during the pandemic when rates were at historic lows. Many of them got 5-year fixed mortgages, which means those mortgages are coming up for renewal right now in 2024 and 2025. When they renew, they're not renewing at 2%. They're renewing at 5 or 6%. Some homeowners are seeing their monthly payments double, and not everyone can afford that. This is creating what some economists are calling a forced selling wave. Homeowners who simply cannot afford their new mortgage payments are being pushed to sell. They don't want to sell. They're not moving for a new job or because they found a better house. They're selling because they have no other choice. And when people sell out of desperation, they accept lower prices. They're not holding out for top dollar. They just need to get out before they default on their mortgage. But interest rates alone don't explain everything. The second major factor is what's happening on the demand side, specifically with immigration and population growth. For years, Canada's aggressive immigration policies pumped hundreds of thousands of new residents into the country every year, and a disproportionate number of them settled in Toronto. This created constant demand pressure on the housing market. There were always more people who needed homes than there were homes available. But recently, the government has started pulling back. New immigration targets have been reduced. Temporary resident policies have been tightened. The flow of new people into the country, and into Toronto specifically, has slowed considerably. Some estimates suggest that Canada's population might actually decline slightly in the coming year, which would be almost unprecedented. Less demand means less competition for homes. Less competition means sellers have less power to dictate prices. The third factor is investor sentiment, and this one is huge. Toronto's housing market wasn't just driven by people buying homes to live in. A massive portion of demand came from investors, people buying condos to rent out, speculators flipping homes for profit, and small landlords building real estate portfolios. For a long time, this made perfect sense. Home prices were rising faster than any other investment. Rents were climbing. It was easy money. But the math has completely changed. When you buy a condo in Toronto today, the rental income you can collect often doesn't cover your mortgage payment, condo fees, property taxes, and maintenance costs. You're losing money every single month just to own the property. The only way that investment makes sense is if you believe the property will appreciate enough to offset those losses. And guess what? Prices aren't appreciating anymore. They're falling. So now you have investors who are cash flow negative every month, watching their property values decline and realizing they're stuck in a losing position. Many of them are deciding to cut their losses and sell. This is adding even more inventory to an already flooded market. The condo market in particular has been hit incredibly hard. There was a massive building boom in Toronto over the past decade. Cranes dotted the skyline. Pre-construction sales were through the roof. Developers couldn't build fast enough to meet demand. But now many of those projects are completing at the exact wrong time. Units that were purchased 4 or 5 years ago at pre-construction prices are now worth less than what the buyers paid. Some buyers are choosing to walk away entirely, forfeiting their deposits rather than closing on a property that's lost value. Developers are sitting on unsold inventory. Some are offering incentives, covering closing costs, throwing in parking spots, anything to move units. A few projects have been canceled altogether because the numbers just don't work anymore. I want to be really clear here because I think a lot of people misunderstand what's happening. This isn't about Toronto suddenly becoming undesirable. Toronto is still a world-class city. It has a diverse economy, great universities, a vibrant culture, and strong fundamentals that will support housing demand over the long term. What's happening isn't about Toronto failing. It's about a market that got so disconnected from reality that it had to correct. Home prices were completely untethered from what average people could actually afford to pay. The average household income in Toronto is somewhere around $90,000 to $100,000. At those income levels with current interest rates, a household can realistically afford a home in the $400,000 to $500,000 range. But the average home price was still sitting well above $1 million. That gap was unsustainable. Something had to give. What we're witnessing now is reality reasserting itself. It's painful, especially for people who bought at the peak, but it's also necessary. A market where young people have zero hope of ever owning a home is not healthy. A market where investors are losing money is not healthy. A market built on the assumption that prices can only go up forever is not healthy. Markets need to breathe. They need periods of correction and consolidation. And that's what's happening now. Now let's talk about what this means for different groups of people, because the implications vary dramatically depending on where you sit. If you're a first-time home buyer who's been sitting on the sidelines, watching this market for years, feeling like you would never be able to afford a home, this moment might feel like vindication. And in some ways it is. Prices are coming down. The insane bidding wars have largely disappeared. You can actually take your time to make decisions instead of being forced to submit offers within hours of seeing a property. But here's the thing you need to understand. Lower prices don't automatically mean affordability has improved. Interest rates are still high. Your monthly payment might be just as unaffordable even at a lower purchase price. Before you jump in, run the numbers carefully. Make sure you can actually afford the carrying costs, not just the down payment. And remember, just because prices have fallen doesn't mean they've finished falling. Trying to time the exact bottom of any market is nearly impossible. If you find a home you love at a price you can truly afford, with a payment you can comfortably make, that might be the right move, regardless of where the market goes next. If you're a current homeowner, especially one who bought in the past 2 or 3 years at or near the peak, this is understandably scary. You might be looking at your property value and seeing numbers that are lower than what you paid. That's a horrible feeling. But here's some perspective. If you bought a home to live in and you can afford your mortgage payments, nothing has actually changed in your daily life. You still have a roof over your head. You're still building equity with every payment you make. You're still benefiting from the stability and security that homeownership provides. Yes, your home might be worth less on paper, but you haven't lost money unless you sell. If you can hold on, ride out this cycle and wait for the market to recover, you'll likely be fine. Toronto real estate has always recovered from downturns eventually. The question is just how long that takes. The people who are really in trouble are those who overextended themselves. The ones who bought with minimal down payments, stretched their budget to the absolute limit, and are now facing those mortgage renewals I mentioned earlier. If your payment is about to double and you can't afford it, you need to take action now. Talk to your bank. Explore your options. Look into extending your amortization, refinancing, or selling before you get into serious financial trouble. The worst thing you can do is bury your head in the sand and hope the problem goes away. It won't. If you're an investor, this is a moment for serious reflection. The era of easy money in Toronto real estate is over, at least for now. The conditions that made it possible to generate great returns with relatively little risk simply don't exist anymore. That doesn't mean real estate investing is dead. It means the strategy has to change. Cash flow matters more than appreciation now. You need to find properties that actually make money every month, not ones where you're betting everything on future price increases. And you need to be prepared to hold for a very long time. If you can't stomach the idea of being cash flow negative for years while waiting for a recovery, Toronto might not be the right market for you right now. Let me also address the elephant in the room. What happens if this gets worse? What if we're not just in a correction, but at the beginning of a full-blown crash? I want to be honest with you. No one knows for sure. Markets are unpredictable. But there are some scenarios that could make things significantly worse. If unemployment rises sharply and people start losing their jobs, you would see a lot more forced selling. If more of those mortgage renewals lead to defaults than expected, you could see a cascade effect. If developers start going bankrupt and dumping inventory at fire sale prices, that would put even more downward pressure on the market. These are tail risks, not base cases, but they're worth thinking about. On the other hand, there are factors that could stabilize or even reverse the trend. If the Bank of Canada cuts interest rates significantly, which many economists expect them to do, affordability improves and demand could come back quickly. If the government reverses course on immigration and pumps more people into the country again, demand pressure returns. If rental rates keep climbing and the math starts working for investors again, you could see buying pick up. Toronto's housing market is sitting at a crossroads right now. The direction it takes from here depends on policy decisions, economic conditions, and frankly, a bit of luck. Here's my take on all of this. What broke in Toronto's housing market wasn't some mysterious external force. What broke was the illusion of invincibility. For years, everyone assumed that Toronto real estate could defy gravity forever. That assumption has now been shattered. Prices can go down, investments can lose money, markets can turn on you faster than you ever expected. That's not a tragedy. That's just reality. The people who will come out of this period in the best position are the ones who understand what's happening, make smart decisions based on their personal circumstances, and avoid panic. Whether you're buying, selling, holding, or just watching from the sidelines, the most important thing you can do is stay informed and think long-term. This moment, as dramatic as it feels, is just one chapter in a much longer story. Toronto isn't going anywhere. The fundamentals that make it desirable are still intact, but the expectations need to reset. What we're living through now is that reset in real time. If you found this breakdown helpful and you want to understand what's really happening in markets and economies without all the confusing jargon, make sure you hit that like button. It really does help get this content in front of more people. Drop a comment below and let me know your thoughts. Are you seeing these changes in your neighborhood? Are you thinking about buying or selling? I read every comment, and I'll try to respond to as many as I can. And if you're not subscribed yet, what are you waiting for? Hit that subscribe button and turn on notifications so you never miss an update. Thanks for watching. I'll see you in the next one.